Hey guys, Mike here. So, oh boy, what a day in the market. I mean, this is one of those days that's just good to look at your portfolio no matter what you were holding, which we're going to go into and show you what I'm talking about. Because it was one of those days. We'll go into the charts, the things to look out for, because there's definitely some things to watch out for going into Thursday and Friday for that matter. And, we're going to go into also some economic news, which come out. I'm going to keep you updated on that because I think it's going to start getting a lot more attention going the last few months. But I will say, I never thought, and I can't remember a time, and let me know in the comments if you think differently, where bank ETFs and stocks have traded like penny stocks or even cryptocurrencies. And what I mean by that is, if you look at this right here, this came out today. This is a S&P Regional Banking ETF, KRE. And this right here shows you the total put open interest and the total call open interest. And as you can see, it used to be kind of boring, right? But look at these spikes. I mean, unbelievable. And just look at the calls. I mean, they're out doing the puts. And it's, as I put out this morning, the news brief is an article that came out, so I put part of it in here. And you can see right here, it talks about a $3 billion exchange traded fund tracking the regional banks has become the battleground for traders placing their wagers on the outlook for the industry following the recent financial turmoil. Of course, we know about that. And you can see right here, I mean, it's hit record levels, right? I mean, the bearish options activity jumped a record 1.42 million contracts just on Friday last week, up 60% from the day before. And then, not to be outdone, the call option interest has more than quadrupled to 1.05 million, its highest ever. And even the day trading volume has hit a record 4.9 billion. And when you look at the chart just on this thing, remember, this is a bank ETF. This is not some triple leverage natural gas ETF or oil ETF or tech ETF. Look at that 32% drop. And then look at the swings on this thing. I mean, up 13% in one day, or I'm sorry, 17% one day. Down 12%, up 10%, up another 9%, down 15%. And you can see as you go to the right, I mean, it's just unbelievable. And if I covered up the name, there's no way you would think this is a banking ETF. So, let me know down in the comments if you remember another time like this. And I don't think it was '08 because I just don't think a lot of day traders and there wasn't a lot of, zero DTE options being played daily back in those days, but maybe there was. But I just thought that was amazing. And, of course, how I feel about economists. And then now, of course, this came out today and they said, okay, now there's a 65% chance of a recession happening in the next year. And I'm like, really? And you can see they'd actually been bringing it down from December to February. And I'm talking about when I always say they were a year too early. You can see right there how it was going up from March to December. And they're like, okay, well, maybe not. Here it is. And so I kind of feel like Warren Buffett when it comes to economists. But yeah, in the next year, we'll have to see on that. And this will have something to do with it. I mean, this is the Richmond Manufacturing Survey when it comes to prices paid. And this clearly shows, I showed you one yesterday about raw material prices, clearly shows that supply chain issues are no more and that the prices they're having to bring in or pay for this stuff to make it is coming down. The big question is when it goes to the stores, right? Will they ever bring the prices down? I think that's what everybody seems to be waiting on because the manufacturers are clearly showing the materials they're bringing in, they don't have a problem getting them anymore and they're cheap. And I'm not talking about like for EVs or anything, but other things. Now, the Conference Board Consumer Confidence when it comes to jobs. As you can see, jobs are still plentiful. That is the big thing right now. When you go through this, the shaded areas, if you look at the dates as well, are recessions. And you can see going into every session, this number was going up. And it turns really, really fast, as you can see. So just because we're going up now doesn't mean you can't turn on a dime if the official recession actually hits. Again, we will not know we're in an official recession. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And it's also important to remember that obviously Jerome Powell, the whole point in raising rates and how you slow the economy is you must lose your job. And I think it's the estimate they want between 1 and 2 million people need to be unemployed. That's what they mean when they say they're seeing the unemployment rate at 4.5, 4.6, somewhere in that range, because usually for every 1%, it's like, 800,000 to 1.2 million people lose their jobs, okay? And so that's how you slow down the economy. And the demand part, you take people's paychecks away, therefore they can't turn around and go buy stuff. They can use the credit cards, but what happens eventually with the credit cards when you got no paycheck coming in? You can't pay the credit cards, so you max them out, right? So boom, demand comes down. Suppose that slows everything down. That'll bring down prices in the stores supposedly and everything else and costs. and we get inflation back under control. It's the quickest way to do it. They just aren't going to come out and say that. And of course, they're not going to come out and say that. In a way, in so many words, they have said that, but he's been asked many times about that. And of course, he can't say, yeah, we're going to lose your jobs, right? Because the people who are going to be losing their jobs aren't going to be CEOs and people make millions of dollars. It's going to most likely be people, normal folks, everyday working Americans making $200,000 or below. That's the ones that are going to start getting axed the most and at a very high rate of speed if that happens. Now, what I tell you, today was an everyday rally, right? You got real estate at the top, tech, anything you may look at utilities. Utilities even had a great day, right? It's been a while since they've been up there. Financials, you name it. As long as you wasn't holding, a triple leverage, like bond ETF, which is at the bottom right there, you were green. At least your portfolio should have been green, right? Unless you were trying to short the market. And so, when you look at the SPY, the S&P here, what was happening here? It was stuck almost all day between the 0.50 Fibonacci level and that 50 moving average. Rejected multiple times off the 50 moving average, bounced multiple times off that Fibonacci level until we get to the important part of the day, which is power hour. There's a reason why it's got that name. And you can see, boom, busted through, moved up. And all you got to do, if you ever wonder if this is a true thing, just look down at the bottom and look at the volume in the last hour of the day versus the rest of the day, right? So a big move up at the end. Again, it's a soap opera. We moved above the 50. That's bullish. Start drawing people in, getting them all happy. And of course, when you look at the bigger time frame here and you look at the MACD, you got that bullish crossover, right? And if you look both times in the last few months when this has happened, there's a bullish thing for the S&P. It moves up on a longer term time frame. Again, this is the daily. RSI is above the 50s. You got to keep that in mind right now. We already talked about the moving averages being clustered up like that. And then the other thing is, this is what's going to be interesting in the next 2 days. The weekly expected move. The top of it's around 405. The bottom is around 387. We're less than 1% away from the weekly expected move, which we end up normally it's about 67% of the time. So around 70% of the time, right? Which is a lot. Does that mean we can't move above it? Absolutely not. I mean, you got 410 up there, which will be a beast to try to get through. But it's funny that weekly expected move coordinates with the 0.618, 0.65 Fibonacci level, which I call the golden pocket, which usually is where you might see reversals. What to see. Now, this is Friday, right? Will be officially the quarter end. But again, I was surprised to see this has not moved. 395 max pain. Look where all the options are. Look at all these puts, man. Now look at where the calls. The big part of calls around 410 right there. So just look at this pocket right here. I mean, that's a beautiful range for market makers to be in because all they have to do is grind us, if they want to, for the next 2 days in this range right here, right? And they'll just kill all the options. Basically is what will happen. And so if you're a market maker, where do you want us to go? Does it mean we can't move up? Sure, we could move up. Absolutely can move up to get past 410. Because they wouldn't mind that either because, again, they're not paying out all those puts, right? And of course, the big one to watch, I always tell you, Apple. I mean, it's the big engine that just never stops, right? It's been moving up since the beginning of the year. And importantly, or most important, look at the moving averages on this one. The 50 is your speedboat. It's already turned up its trajectory big time. But look at the freighters, the 100 and especially the 200. They're flattened out and they're starting to try to turn now, right? It's hard for them to do that. You look at all the other move ups on this thing, moving averages were not moving up. They're most likely moving down when it happened, right? And so that's something to strongly keep in mind because that is a huge momentum if the 200 starts to swing up especially. Now, the thing to really keep in mind on this move is right here. What do you see happening? Every move up was a lower high, right? These peaks didn't quite get as high. So you have this downward trend line right here. It's going to coincide with around, I think, 167, 168 maybe, somewhere in there. We'll have to see. Which is what a lot of people are calling for Apple maybe to get to. But this is the trend line I'll be watching. My alert is set. Because if it gets above that, again, then you're in business for Apple, right? Because now all of a sudden you look at a newer high over the old high, right? And so that's what I'll be looking at. And I'm not going to count it out because it's Apple, right? It's like a safe haven. Now Tesla, there's that trend line I've been talking about. People are probably tired of me mentioning that trend line. But Lord have mercy, 1, 2, 3, 4 rejections. The last 7 trading days, I believe it is. And you can see that anchored VWAP goes back to February. Been using it as support right there. But when you really look right here, this is the first time I'm looking at it, and it looks like it's cooling up. Like it looks like it's cooling up for a move higher and trying to finally bust through that trend line. It's been sitting there for months of getting rejected on, right? And if we sit here and you look at the volume as we go, let's go to a smaller time frame here, you can see what I'm talking about. The volume on today's move up is higher than the volume on the move down yesterday, right? And you can see as I adjust this line right here, you can see it's calling up. And I'm not going to be surprised a bit, especially, I'm not saying it's going to happen this week, but going into April, and you know Tesla, this thing can move. If it does bust through, I'm not going to be surprised if it gets rejected. How can you be surprised? It's been rejected every other time, right? But if it finally gets above there, that is going to be bullish, right? And then going to IWM, what we talk about, we officially got the bullish MACD cross today, right? The RSI is still below the 50 line, but watch for it to move up. And, you know, you look at this, again, we've been in this chop box for like 14 months now, but these moves up have almost been pretty much automatic. When you see that MACD cross, and you can see all the MACD crosses down there, you get the move up. Again, the moving averages on this one are totally different than the SPY, right? They're pointing either sideways or down, right? And so a lot of work to do on that one. But again, they're all doing what? Very tightly grouped together, these moving averages. And so we'll see. Again, you're going to have financials, industrials, right, move up to let the IWM move up, because they make each of them are over 15% weighted, as I showed you yesterday. And of course, the dumbest thing you're seeing on the internet right now, which is funny, and if it turns out to be true, that's fine, is how the Qs are in a new bull market because they moved up 20% off the lows, which is a technical definition of a new bull market, right, for the Qs. And that could end up being the case. You won't know, right, for months from now. But what's crazy, if you go back and just look, and why I hate that definition, to just the dot-com bubble alone, there were not just 20% moves up off what they considered that bottom at that time. There was up to 60% moves off the bottom. And multiple times was it over 50%, multiple times. I think it went from like 25 to 60%, somewhere in that range, 5 different times during the dot-com bubble. Had to come off the low, which they thought was the low and the final low, to move up, right? And so, and then, oh wait, I think it happened. I know it happened once. I think it happened twice. And so again, that's, you know, a dumb technical definition, but we'll see. I mean, 6 months from now, if you look back and you go, oh yeah, okay, that was the new bull market, you know. And I had somebody ask me in the comments, like, are you secretly bearish? It's like, I'm not secretly anything. I think I pretty much put stuff out there for you. For those who skip through the video and don't watch the whole thing, you probably have no idea because you don't watch it all. And so you hear me say this and then you miss all this over here. But, you know, for me, it's simple. Short term, we're going into April. That's usually a green month, right? The moving averages are consolidated together, clustering. That usually means a move in one direction or the other. The market loves to go up the majority of the time, not down. The bearishness in the market is crazy. Rarely does the market go down in bearish sentiment like this unless there's some crazy deal that happens, right? We already had the banks happen. Hardly phased the market at all. And so, you know, what else could it be? I don't really know what. You know, so it's much easier to me for the market to move up short term than it is down term right now. Now, long term, of course, and then, of course, short term, I'll say this. What is all these moves based off, guys? And you may get tired of hearing me say it, but it's just the truth. All these moves are based off rate cuts from the Fed, the pause, and then the cuts. Remember, they are saying in June, July, the Fed is going to start cutting, okay? That's why you saw these moves up right now. On the other side, the flip, and plus when it comes to the market and everything, the market's not the economy. We still got a bunch of money out there, still got a bunch of jobs to pay off credit cards. On the flip side of that, what do you got? What happens, the biggest question of all, what happens if the Fed doesn't cut rates and they actually hold them for 6 to 8 months? Put down in the comments, what do you think is going to happen to the economy, and what do you think, more importantly, is going to happen to the market? That's the big thing. That's what you got to say. Think about Micron. Disastrous earnings. Disastrous. Right? Margins for next quarter are going to be horrendous. But they said, don't worry about Q3. We're good. So the stock went up 7% today. Right? And, of course, semiconductor continued to rally. Well, let me tell you right now, I did a members video yesterday on this, and I showed them. I don't care. Semiconductors are not immune in a slowdown or especially a recession. They all go down. All right? So if that happens, down we go. All right? Just FYI. So it doesn't matter, but that's the bet. The bet is they're going to cut the rates, and I guess they're going to cut the rates in the goodness of their heart, and the economy is going to be roaring. I guess that's what they're thinking. You know, every other time in history, when they cut rates, the economy is not doing good. Okay, that's why they cut the rates. And if they do cut the rates, either inflation got solved in less than 3 months or they gave up, okay? But you got to ask yourself, if they hold them, if they stand true and say, we're going to get inflation under control, because that's terrible for everybody, especially for, hard working class people, and they hold them all year, put in the comments, where's the economy going? Where's the market going? That's what you got to ask yourself. Now, my philosophy is simple. I go based off odds and history, and the economy, especially now over the last 15 years, has never been able to hold up under high rates at all. Okay, it's just not built for that, right? The market is, you're gonna call it a welfare baby, whatever you want to call it, an addict that needs a fix. That's its fix, right? That's what it needs. Okay, and so that's just my simple thing. If they keep the rates up, or if they cut the rates, we either go into a recession, or they pulled a 2019 and started cutting rates, even though we weren't in a recession. So that could happen, right? They could fold under pressure. I don't know. But again, you still have the X factor of inflation in there somewhere, which you have to account for. So, that's where I'm at on it. So again, I really want to see the next 2 days, do we stay within the weekly expected move, or does the market keep churning higher and we break 410? That's really a key level I want to see get broken and stuff. So that's where we're at. Let me know in the comments what you think, where you think the market's heading over the next couple of days, where you think it's heading in April, okay? And I'll end up seeing you guys tomorrow for another fun day.